The purpose of my trip really is in support of clients, also to see the people of Goldman Sachs. Once upon a time I was stationed in London, had responsibility for this region, so it's a conference I've been to before and a client base that I'm familiar with. If I were to step back and take on board your question about the German economy, the outlook, clearly we're at a point in time where there are more challenges, changes in energy availability, some of the changes in the global trade, less demand out of China, all having an impact on the German economy, but also some adjustments that can be made, some adaptability. Certainly we've seen that before through the history of Germany. Some possibility of encouraging developments on the forward.
Yeah, you have been speaking to CEOs as well already here on the ground, so perhaps you can transcribe a bit the mood among people, and also whether you think that the business model of the economy as such is still working.
Yeah. Well, I think last night my experience speaking with a bunch of CEOs and CFOs from the German corporate sector was a bit of a mixed sentiment. So some of the headwinds that have impacted the economy recently could potentially be a source of relief on the forward. Energy prices are coming down. There's been structural investment to improve the situation there. Interest rates are coming down. There are opportunities to leverage sort of the strength of the German fiscal balance sheet, make some investments to support some structural evolution within the German economy. And so right now the recent growth trajectory has been much more subdued, and there's some cause for pessimism, but there's also structural change underway. And again, we've seen this evolution over time in Germany. So there were some hints of optimism as well coming through the client base, which I found very encouraging.
Yeah, let's talk a bit about what your clients actually now want, because we're seeing that CapEx or huge investments are not happening right now. What do clients think? Are they waiting, or are they kind of making plans once there's more visibility?
Sure. So our clients are constantly trying to assess what they can do to grow their companies. There has been a period where there's been a pause as people are looking for certainty on economic trajectory, what was going to be the path for inflation, what was going to be the path for unemployment, the path for growth. But as central banks around the world have been easing policy, I think there's more optimism. The capital markets around the world are more open. There's more availability of risk capital and investment. And so I think our clients are trying to assess what's the next step they need to make in terms of taking their companies forward to a path for growth.
Yeah, traditional crises also mean that valuations are not really high, so it could be also interesting for people from the States, from elsewhere, to buy right now. So do you see that appetite from investors abroad?
Yeah, I think strategic activity, broadly defined around the world, is accelerating. We've observed that in our own business. Goldman is obviously one of the world's leading financial advisors. We're also a big underwriter of debt and equity capital, and our clients are coming in to engage with us more actively. They're opening up their eyes. They're looking around the world. They're willing to do some transactions, to do some deals. And you're right, the ultimate question is finding valuation agreement between both buyers and sellers to unlock some incremental bits of activity.
We have M&A volumes really low right now, I think for the last 3 to 4 years almost. So do you see that coming back? Is there something like a backlog in that respect?
Yeah. I mean, there's a couple different ways to think about that. There's a couple of sectors. There would be, the large cap corporate sector. There'd be sort of more middle market corporates, and then also private equity or financial sponsors who over the last couple of years have been reasonably less active. And that's sort of an engine of overall economic activity and strategic activity that could come back online. And again, with more, reopened capital markets, availability of debt, lower cost of financing, plenty of equity capital, that is an opportunity that you could see to unlock some transactions.
Yeah, that brings me a little bit to the States and that huge cut from the Fed. So with that, is that like the start, in your view, of a trajectory of more rate cuts to come and also of lower financing costs, and then potential is stimulus for the economy?
Absolutely. I mean, I think it's part of an expected continuum. Those cuts were expected by the market, and we've seen gradually improving conditions across the debt capital markets over the balance of this year. And so I think this first 50 basis point cut is a clear signal in terms of the new direction, and hopefully that'll unlock incremental amounts of confidence and should obviously reduce cost of capital and perhaps spur some more strategic activity heading into the end of this year. And then as we move into 2025, hopefully improve backlogs and more activity across the markets.
Do you reckon they managed to maneuver a soft landing?
Right now, that is consensus. It's always a very tricky job to manage economies through transition, but inflation levels are coming down. Unemployment is manageable. They're starting to put through the rate cuts and sort of maintain a soft landing trajectory. It's certainly consensus and my hope and expectation.
Would you say that the U.S. and the Fed is ahead of the curve when it comes to policy making and versus Europe?
I think that the different geographies have very different characteristics. There are different points in their recovery cycle. So we see easing really from central banks around the world. Each of them is going to need to calibrate the individual characteristics of their own economy, but I think there's a shared objective that we try to have, soft landing and get back to a growth trajectory for all the major economies around the world.
Yeah, let me bring you back to the States and the big elephant in the room, the elections in November. So whatever the outcome will be it be a big risk for the economy and also for uncertainty?
Well, when it comes to the election, whether it goes one way or the other, at this point we don't know. The expectation is it's going to be a very, very close election, as has been the case for the last several U.S. presidential elections. But I think regardless of the outcome, the U.S. economy is in pretty firm footing, and I'd expect the forward trajectory for growth overall in the U.S. economy to be reasonably consistent. There obviously could be policy differences depending on who wins and who loses, but overall for the U.S. economy, reasonably optimistic.
Okay, it's interesting. So the outcome, of course, matters in terms of policy making, but for the economy as such, if I listen to you, it doesn't matter too much?
There will be specific components that may be impacted more or less in one administration versus another. But if I were just to take a step back and think about what are the next couple of years, likely to bring across the U.S. economy, I remain optimistic. We'll see, a soft landing for the economy overall, more activity coming through the capital markets and the system. So reasonably hopeful.
Yeah, you're with Goldman since 1996, I've read, so a long time in the industry. If you look at the state of the industry right now, also the growth trajectory, what do you think? Where can you achieve growth? I mean, given that it's a very competitive environment.
It's a super competitive market, but for us at Goldman Sachs, we have two big businesses. We have our investment banking and markets business, and we have our asset and wealth management business. And some of the opportunities in asset management and wealth management are some of the most attractive opportunities we see around the world. In fact, here at the German conference here in Munich, very good opportunities with our clients across the wealth sector and driving incremental opportunities here for those clients.
How badly or not badly could you be affected by more geopolitical tensions, because you clearly have to find your side?
Well, geopolitics is something that we live with all the time. Our clients live with it all the time. By definition, it is incredibly uncertain. So we're in the business of trying to help our clients adapt, adjust, assess the risks, figure out how their various business components could be impacted in various different scenarios, and help them position for that.
Do you see them really changing their supply chain management in order to safeguard also deliveries and supplies?
I think given what we've seen over the last couple of years, there are a number of our major clients around the world that are making very significant investments to create, supply chain resilience and restructure the way they route their products and services through the chain. I think that's absolutely something that we're seeing across the client base.
Do you think that's net positive for the States because they bring it back home?
Well, it depends. It depends on how the rest of the world, we ultimately exist within an international ecosystem, and so there be certain aspects of bringing it home that can spur opportunity and growth in the United States, but ultimately there may be, consequences for international growth profile. So at the end of the day, what drives a lot of growth across the economy is ultimately good for America and by extension good for the rest of the world too.